All right, ladies and gentlemen, we are live. Welcome to the Investors Performance Group meeting for March 2026. Before we get started, I would love to know where you guys are tuning in from. So make sure you guys use the comment section. I would love to have you guys let me know where you're watching from, where you're joining us from. I know we have people who watch all across Canada in some cases, and sometimes even some of our friends down in the US. So let me know where you're tuning in from. You never know, you might know someone in the comments. And we're going to kick things off right out of the gate. So let's have some fun here today. All righty. Welcome again. So let's do this. So we are the Investors Performance Group. This is your March 2026 meeting. We're going to be talking a lot about the numbers today because I think it's very, very important to understand the opportunities where investors have today, and then we're going to have some great speakers. Let's dive into it. Let's talk about it. So of course, the Investors Performance Group meeting is brought to you by the Kelly Fry team. We are a full service real estate investment team that is focused on helping you guys build your wealth in real estate. We have everyone that you need to help you build that wealth, from mortgage brokers to inspectors to lawyers and accountants, as well as experts like our keynote today who are going to help you build your portfolios bigger than ever. Welcome. We've got someone in Port Coquitlam, just off Kitchener Ave, so not too far from me right now. All right, so again, we're going to be kicking it off today from with our market deep dive. We do this every single month where we dive deep into the numbers so you understand what's actually happening in the market, where the opportunities are, and how you can take advantage of it. Then again, we're going to be bringing up our keynote guest speaker, Debbie Balfour. She's going to be talking about how you can get investors first and then the deals second. It's going to be very important. Debbie and I actually had a deep conversation over on my podcast, which we'll talk about a little later, where it's kind of backwards what people are being taught to raise capital. And Debbie's here to set the record straight. So I'm super excited about that. And of course, we've got several hot deals that we have found on the market today. You can't tell me there's no cash flow anymore in the Lower Mainland because I am finding it daily now. So it's definitely an investor focused market coming back. So welcome everyone. Let's dive right in. But of course, we would love for your guys' engagement. If you guys are finding value in this, screenshot your things, take a photo of what you're watching, post your ahas, and tag us either on Facebook or on Instagram at Kelly Fry Team. We'd love to find out what are some of your biggest takeaways. And of course, engage in the chat. I would love to see lots of questions in the chat, chat with each other. And of course, what are your biggest ahas in the chat throughout today as well? And also, as a bonus for you guys joining, I'm going to be giving away my complete investor content starter pack for free for you guys. There's over 30 pages of valuable information on how you can get started on social media today. And I'm not going to talk too much about how it can impact your business as investors, because I'm pretty sure Debbie's going to talk a little bit about that. However, social media, we know, is one of the best ways that you can grow your business. This is going to help launch you guys, giving you the confidence to start creating content out there focused towards investors. So check that out. You can scan the QR code and I'll drop a link in the chat in a little bit. All right, let's dive into it. What's going on in the market? Well, we see all the headlines. We know what's going on from that perspective. And of course, if you've been joining us regularly, you know I say this often. There's no such thing as a Canadian real estate market. In fact, there's no such thing as a Vancouver market or a Fraser Valley market. And these numbers will prove it. Now, we are going to look at a bit of a kind of zoomed out lens to begin with. And then from there, we're going to dive in and go deeper on the numbers so you can understand what's really happening out there. And I want you to put your investor glasses on, or your investor hat, and look at these numbers from an opportunity standpoint, because right now there's blood in the streets, as they say. There are opportunities for the savvy investors to go out, start making offers, getting properties under contract, and start to build your long-term wealth out there. This is not 2021 where you got to overbid and pay more for properties. This is the market that investors excel in, and we're going to really show you here today. All right, from the real estate boards themselves, GVR said that February continued the recent trend of slower than average sales, seeing a 10% decline over the same period last year. And according to the Fraser Valley Real Estate Board, the Fraser Valley markets showed early signs of a spring thaw in February, with sales increasing over January, but continuing the trial typical levels for this time of year. So things have been still slow. We are seeing that sales are starting to happen, but not like we've seen in the past. It is still quite slow. However, we are starting to get into that spring market when it comes to inventory. Let's take a look at that. As you can see here, we're going to take a look at inventory first. And typical, you see from December through to January here, we have seen an increase in overall inventory. Again, that's very, very typical. You see it here as well last year. This is what we call the spring market. From there, you see it in the Fraser Valley as well. And then obviously a little bit of a jump over last year in terms of inventory in Chilliwack. Overall, though, we have more inventory than we did last year at this time. So that's something to note. There's a lot more choice for buyers than we've ever seen before, specifically in this normal time. And as you can see with the trend from last year, this is going to jump up to probably around 17,000 or so listings. If we see that this trend continues where we outpace last year's inventory, we can probably guarantee that over the next couple of months, we're going to see a lot more hit the market, creating downward pressure on homes in the future here as we go through. This is not something that we weren't expecting. Again, this is something we've been tracking for a while. So inventory means there's more choice for buyers. And as investors, that means more choice for us to negotiate, especially as prices continue to come down. All right, now the sales, we did see a traditional sales bump that starts to come with spring as well. As you can see here from January to February, we had a decent incline in the sales for GVR. Same thing with Fraser Valley and actually a bit of a dropout in Chilliwack. So Chilliwack's been showing a little bit of a different trend. And at the end of the day, though, we can see here that this is still quite low compared to normal trends. Last year, we were averaging 1,800 sales in the Greater Vancouver area. We only hit about 1,400. So we've got more inventory than we had last year, but less sales. So again, we know as investors, we know as savvy real estate people, that trend line is going to continue to put pressure on housing prices. So that's something to definitely note. Welcome from Port Moody, Maddie. Welcome. All right, let's keep the ball rolling here. Oh, let's go to the next slide. Okay, so next thing is obviously what we were talking about. What is it looking like right now for average sale prices? Now, as you can see here, the average sale price has dropped slightly. Now, I will say Greater Vancouver has been pretty steady overall. Now, keep in mind this is a zoomed out look. This is all Greater Vancouver, all Fraser Valley, and all Chilliwack. So we have to take that part with a grain of salt. As I mentioned, there's no Canadian real estate market, there's no Lower Mainland market. So this just gives us an overview, and then we have to do those deeper micro looks into those different segments. What are the cities looking like? What are the neighborhood looking like? And what are the product types looking like? We'll dive into that in a little bit here. But as you can see, it's been pretty steady in Greater Vancouver. Fraser Valley is starting to show a steeper decline into the spring months, and Chilliwack has taken a bit of a nosedive out there as we get into those spring months. So again, these are trend lines that we are noticing now month over month. So the longer it holds, it gets us deeper into what we call a buyer's market. This thing keeps pausing. Let's try to jump to the next slide. There we go. Okay, so here's another trend that we've been looking at as well is the sales to active ratio. So this is what's going to tell us if we are in a buyer's market, a balanced market, or a seller's market. Now, what's interesting, because it is traditional this spring to see more sales increase as well as more listings, we were down in most markets in that buyer's market territory. Anything below 12% for an extended period of time is considered a buyer's market. In most cases, we can see here between the three major boards, all of them have just crept back up to around that 12%, just slightly under. So we are still in that buyer's market position, except for just slightly into the balanced market for Chilliwack, but we're still trending on that bottom side where there's a lot more opportunity for buyers than there was before. And then, of course, another trend we've been looking at as well is the percentage of original price to sale. So where are properties actually selling in relation to their listing price? This is just a simple indicator. It's not to be used as like the end all be all, I would say, but it gives you an idea in the market, in the area that you're buying in, where are you buying in relation to the market? If we see that the average property is selling at around 95 to 96% of its list price, and we buy something at 92% of its list price, we know we have likely done better in the market, or at least cushioned ourselves in the market based on the averages in the area. Now, we can get very micro with these numbers as well. We could zoom these right in to the product type that you're buying in the local area. This, again, is just the overall in the Greater Vancouver, Fraser Valley, and Chilliwack. However, what's really interesting about this number right now is it's a lot higher than I would have assumed looking at it, especially when we see how low it had gotten in the earlier months. So it seems like sellers are now starting to hold a little bit stronger to their price than we've seen prior as we head into the spring. It's that spring. I would say basically, they get that courage in the spring market. Oh, it's always a good time to sell your home in the spring. That might get deflated as we get through the spring market if the inventory continues to drive at a high level and sales don't keep pace. So it's something to keep an eye on as an investor. All right, let's go and zoom in now on some of the markets that we are operating in and around Fraser Valley, Chilliwack, and Lower Mainland. We're going to start all the way out east and we're going to work our way west, starting with Chilliwack. Now, the story with Chilliwack is very similar to what we saw overall. Detached is down 8% year over year. So on average right now, the property values are sitting around $875,000. And again, a couple of years ago, it wasn't uncommon to see this over $1 million. So property values have definitely come down. We are starting to see some detach well below that 800,000 mark now, creating those opportunities for investors for cash flow if you find the right combination of sweet mix. We can see here, days on market dropped a little bit. Inventory has climbed just slightly there. Townhouses took a little bit of a hit, 3.5 down over last year. Inventory is up, though, quite a bit, 41%, meaning we're going to likely see some pressure in the townhouse market there if that trend continues. And days on market is increasing, meaning it's going to take longer to sell. And days on market is the enemy of a home's value. So keep that in mind. The longer the days on market, the more opportunity you might have to negotiate for price. And then condos actually saw a bit of a bump over last year. So this is why I say there's no such thing as that real estate market. We take a look in one area, we've seen down, down, up. So condos holding a little bit fair. Their inventory has jumped up 15% and it is taking a little longer to sell, but they're still showing a little bit of stability still in that area comparative to the detached and townhouse market. Moving over to Abbotsford, Abbotsford detached just took a little bit bigger of a hit. They're down to under 1.1 now, $1,090,000 in their average price. Again, they were up over 1.2 at some point for an average price. So this is incredible to see that you can still now pick properties up, still slightly over a million, but we are seeing some properties well below that $1 million mark now. So there's some opportunities out in those areas. Days on market has actually dropped and inventory has come down a little bit. So we might see that maybe level out a little as we go through the spring market. It'll be interesting to watch as we go through that. Townhouses down, inventory is up, days on market up significantly, and condos also down nearly 10%. And they're up over 80% days on market. It's almost 2 months now to sell a condo on average. And of course, the inventory is up quite a bit, 300 condos right now for sale in Abbotsford. So trends to watch on this one is obviously an increase in the attached market. Maybe there's going to be some motivated buyers. If you're an entry level investor, you don't have a lot of capital, there might be some good opportunities for townhouses or condos looking for those distressed sellers in Abbotsford. In the detached, maybe the cash flow won't be there. It depends on what product types, what sweet mix you're looking at. There's still some opportunity, but if the inventory is down, there's going to be a little bit more pressure on the buyers versus the sellers. Moving over to the city of Mission, we are sitting at negative 12.8% down in Mission, so around just over 950,000 for a detached home there. We are going to be featuring a house in Mission today that is a good cash flowing potential property in our hot deals segment, so keep an eye out for that one. We can see the time on markets going up to over 2 months now, and inventory has been climbing. Townhouses, a little bit harder hit, down 14.5%, averaging 665 right now. And we've seen inventory increase. And we've also seen the days on market. It's almost 3 months to sell a townhouse on average. That means when we talk about averages, though, keep in mind some properties are selling faster. A lot more are taking even longer to get us to that point of an average 90 days. So if you think about that, that means that there's several properties taking way longer than 90 days, bringing that average up compared to the ones that are selling faster. So it is definitely a buyer's market in that category there. And of course, the condos are down 5.5%. And you can see here, not as big of a pocket or a pool to pull from because Mission has always been traditionally a detached market. However, we see more and more densification happening in that area. I remember doing this several years ago. And when I'd say condos, there'd be 2 on the market. So, 2 to 35 is a big jump. Okay, moving out to Langley. Langley's taken a big hit as well, down 11.2%. We are now under an average of $1.5 million. That market used to clear 1.7 to 1.8 all day long in that area. So that's a pretty significant drop. You can now start finding great properties. And in fact, the Langley and Cloverdale market, we're seeing cash flow start to arrive back in some of the pockets of the coach home market. So keep that in mind. You can get 3 suites out there that it's still around 1.2 to 1.4 million, depending on the suite mix. However, we are seeing cash flow coming back into those markets right now. Days on markets, 55 days. We're down a little bit on inventory. It's pretty flat, not a big change there. Townhouses down 5.4%, inventory down very slightly, taking longer to sell, and condos down 4.6%, averaging just under 550,000. And again, inventory staying pretty strong there as well. Now, we do like to do this every once in a while where we'll actually dissect a sub-market in those areas. So when we look at Langley, there's lots of sub-markets in Langley. You got Langley City, you got Willowbrook, we got Willoughby, all these areas. So taking a look at Langley City, and this is why I say there's no such thing as a Canadian real estate market. You zero in on what you're looking at. Langley City is actually faring better overall as an average. It's only down 4.3%, meaning other areas of Langley are getting hit harder than Langley City in the detached. So something to think about when you're out there looking for properties. You can see here the days on market have increased significantly, but the inventory has dropped 18.5% in detached in that specific market over here. Obviously, the townhouses, though, this is where Langley City is getting rocked. They are down 27.7% in the townhouse market, comparatively to 5.5 in Langley as a whole. So if I were to be looking at Langley City as an investor, I might be looking at where we're seeing some of the bigger drops because maybe we can get a better deal out there in the market. Now, it's not always the case, but it's a possibility. If other people are following the drops and what people are undercutting and underpricing each other, maybe there's your opportunity right there is to find that next person who undercuts and negotiate hard on one of those. Although inventory has dropped in that market, and of course the condo market a little heavier hit than the average. A lot of condos were being built in that area, a lot of densification. So they're down 8.3%. Big jump on days on market and a bit of a boost in the overall inventory as well. Out to Maple Ridge, down 15.4% year over year. So that is taking a bit of a hit in that market. Townhouses as well, down 13.3%, and condos down 8.4%. So this whole market has been kind of rocked in this area. Days on market is up overall, except for townhouses, down 8.3%. So townhouses are still selling in about a month on average. Inventory pretty flat in the detached, significantly up in the townhouses, and quite a bit up in the condos as well. Breaking down Maple Ridge West, this is an interesting stat to look at here when I broke this one down. You can see detached in this area is down 21%, just over $1 million right now as an average in the detached area West Central. We see, though, that the days on market is still pretty quick to sell and, inventory has dropped, but that is a huge, huge drop comparative to the average in the area. Townhouses, there was 16 on the market in this area. There's no stats because nothing sold in the last month. So that's an indicator as well that things are not selling. 16 is not a lot of listings, but nothing's really moving in that market, at least not last month. And then townhouses down a bit higher than the average in the area, taking longer to sell in this area, and the inventory is up 12% for West Central. Over to North Surrey. North Surrey has taken a big hit in detached as well, down 18.4% over last year. Inventory is down a little bit. However, it's taken longer to sell. Townhouses are flat. They haven't been affected too much over last year. Days on market has increased, and the total inventory is down a decent margin there. And that's maybe why it hasn't seen as big of an effect because we haven't had too much inventory in that area. Condos down 7.3%, which is not too bad considering some of the stats we've seen about North Surrey before, especially the Wally area. Wally got hit pretty hard there for a while, but it seems to be settling down a little bit in that market. Up on days on market, and inventory has actually come down there. So tails of multiple markets going on here. Surrey in general, so that's including your Newton areas and Fleetwoods and everything like that, down 13.7%. Inventory pretty flat, down slightly. Days on market increasing. Townhouses are down 4.6% and condos 11.8%. So it took a bigger hit in that area of Surrey as well. Inventory has crept up. Over to Coquitlam now for our Tri-Cities folk tuning in. Detached fare, not too bad, down 2.3% over last year. We've seen worse markets, so not too bad in the Coquitlam area. Inventory has been pretty level over last year, and it's gone up a bit, so it's about a little over a month to sell a detached house around here. Townhouses, on the other hand, and condos, that's a different story. Down 8.7% and 11.9% respectively. You're now able to find a Coquitlam condo for an average of 615. That is crazy to say because I remember when condos were averaging over $800,000 in this area. So affordability is coming back into some of these major markets that are closer to Vancouver compared to what we used to see before. And of course, inventory up across the board on those two. Not too much on townhouses, but definitely on the condos. All right, Port Coquitlam down 6.4% right now. So, not a huge drop compared to some of the markets, but definitely affecting. We are on the border of dropping right below 1.4 million as an average. Up a little bit on inventory, big jump on days on market. It's about a month and a half now to sell on average. Down 4.6% on townhouses and down 7% on condos at this point. Inventory up across the board and taking longer to sell, except for townhouses. Still moving. 19 days is not bad to be on the market for a townhouse in the Poco area. So, New West, we've had a few people request New Westminster beyond these. So you can see here down 3.6% there. Townhouses down 6.6 and condos down 6%. Inventory up across the board significantly in the townhouse market there. However, this is a pretty crazy stat though. Only 9 days on average still. So it's down 82% over last year. Couple things to note around that. Sometimes what happens if there's not been a lot of sales, then that average will come across the ones that actually sold. And if they weren't on the market that long, then that could drive that number. So take it with a little bit of a grain of salt. That's why these are stats that we analyze, take a look at, and continue to go more granular based on the property you're looking at. And then lastly, not lastly, we've got Burnaby North and then Vancouver East. Burnaby North down 3%, 6% on townhouses. 5.3% on the condo market, up in the inventory, down slightly on the condos. So faring a little stronger than some of the Fraser Valley. And then, of course, Vancouver East is down on detached 5.3, up on the townhouse market, surprisingly 6% over last year, considering an average is still over $1,143. $1,143,000. And then down 6% on the condo market. Pretty flat on the inventory here. Inventory up quite a bit. So this number might start to change in the spring market. We'll keep an eye on that over the next couple of months. And then down a little bit on the detached. So interesting to look at across all the different markets, what's been happening. And as you can see, it is a roller coaster. There are property areas that are holding strong, other areas that are being hit. Fraser Valley specifically has been hit pretty hard. And a big part of that is the overinflation that it experienced during COVID. It rose the fastest. It had the biggest marginal gains. So it's obviously come down the heaviest over this period of time with the increased interest rates we saw and then all the market uncertainty. So what does this tell me? What this tells me is that as investors, we need to start looking for the opportunities out there to find the distressed sellers, find the people who need to get out of their homes and start making offers on properties, start analyzing them. We don't have to absolutely send the craziest lowballs necessarily. I mean, we can lowball. What I'm talking about is you see people who are sending 200,000 under asking, which most sellers aren't going to take it, but maybe you send something 70,000 under asking and negotiate and get 50 grand off. That is a great win, especially when you run your numbers at list. Anything beyond that becomes a fantastic sale. And we're going to show you a couple examples of that during our hot deal of the month segment later on today. However, that's it for the markets. If you guys have any questions about the market and what's happening, make sure you guys are throwing them in the chat. I'll jump in the chat and answer anything that I can while we're going. But in the meantime, I'm here to listen on how we can raise capital from a credibility standpoint, from a trust standpoint, not the fact of just finding deals and starting to throw it on Facebook. And to do that, I want to bring up our keynote speaker. And of course, what I really recommend is take a lot of photos. Again, tag both myself and the Kelly Fry team, especially with Debbie Balfour coming up. I'm going to drop her socials as well in the chat so you can tag her as well. So help me in welcoming Debbie Balfour to the stage here. Let me find my cursor here. All right, Debbie, welcome. So, for everyone who is not familiar with Debbie, Debbie is a real estate investor success coach. She's an active investor herself, and she is the host of the Let's Talk Real Estate podcast, which I have been had the honor of a couple times now being on that podcast. So, thank you so much, Debbie, for having me on and letting me share for your group. But as well, we've had her recently on my podcast as well, so I'll talk about that later on. She has built and scaled a diverse portfolio using multiple strategies, and now she's here to help investors such as yourselves close fully funded deals by building credibility, trust, and investor confidence before the deal is ever presented. So, ladies and gentlemen, welcome Debbie in the chats. And Debbie, welcome to the stage.
Thank you so much, Cam, for having me. I'm excited to be here.
Well, we're excited to have you. I know we just had a great chat over on my podcast recently. And what better thing that we could do is extend that conversation and impact the investors who are joining us here tonight. We've got over 20 people live with us. And so I would love for you to pour into them. I'm going to swap my slides over for yours now. And basically, I'm going to stop talking because honestly, they're here to hear from you. So Debbie, thank you so much. I'm going to jump off and let you take it away.
Thank you so much. So picture this, everyone. You're walking downtown on a sunny afternoon and a brand new red Ferrari glides up beside you. Windows are rolled down and inside the most stunning person you've ever seen. And they lock eyes with you and they say, "I've been searching for someone like you. Will you marry me right now, today?" Now, let's think about this. What would you say? Pop it in the chat for me. Cam says, no. That's right. We would normally say no, because even though the Ferrari is shiny and, you have no idea if it's stolen, if it's borrowed, if it's rented, if they're living out of it. You don't know their values. You don't know their intentions. You don't know anything about them. So, and before anyone agrees to marriage, you normally go on at least a few dates, right? And have a real conversations and build trust over time. But this person wants instant commitment with zero relationship equity. So you're probably laughing at this, saying, where's she going with this? Well, now here's what most investors do. You're laughing about this and you'd say no, but most investors do exactly this. They never stop to think about it. This is exactly what they're doing. And this is exactly how they look when they show up with a deal before they've even built trust. You're asking for a serious financial commitment from people who don't know you, don't understand you, don't trust you as yet. And just like you wouldn't say yes to that Ferrari stranger, you won't say yes to deal. I get almost every day messaged by new connections on LinkedIn in particular, people reaching out. And as soon as they go, "Oh, thank you for the connection. Love to jump on a call with you and tell you about the deals I have." That's exactly what they're doing. The same thing. They're asking me to marry them, and they know nothing about me, and I know nothing about them. So if you're a real estate investor who has lost deals because you couldn't get them funded in time, has shared opportunities online and felt completely invisible, or has felt panic and stress and self-doubt as soon as you thought about raising capital, and has hesitated to pursue great opportunities because you weren't confident you could fund them, or if you're terrified of finding even a great deal because you're afraid that you're going to watch it slip away, then what I'm about to share is going to completely change how you're going to think about funding your next deal. So let's flip the switch. Flip the script. I flipped the switch too on it. So in this presentation, my goal is simple: that you never lose another deal in the future because funding was never ready. what we're going to learn today is my method of building a qualified pipeline of investors that are investor partners that are ready to say yes. Even if you don't have a long track record or no track record at all, I'll show you how you can build that investor pipeline from the ground up. So whether you're brand new or growing your portfolio, when the right opportunity shows up, you're going to be prepared to get it funded. Are you with me? Are you ready to go? Okay, let's get going. So this may be uncomfortable for everyone to hear. If you've lost a deal you were excited about, the problem wasn't the deal. The problem was you, because the order was wrong. Not because you're incapable, and not because you don't know anything about real estate, and not because you ran your numbers wrong, but usually it's because you were taught to focus on the opportunity first. The opportunity, find the deal, it's the most important thing, and everything else later. And because of that, when a deal appears, people didn't know you. They didn't understand your experience. They couldn't relate to how you think or you operate, and they hadn't built a relationship with you before you asked. Just like the Ferrari stranger. But here's what most investors miss. Trust doesn't happen in a vacuum. It starts with visibility, and visibility starts on what is it? What is it, Cam? Social media. So if
Social media.
if people can't see you, they can't get to know you. And if they don't know you, they don't trust you. And if they don't trust you, they won't fund your deals. You could have the best strategy. You could have the strongest values. You could have the most incredible opportunity. But if no one knows you, if no one sees you showing up consistently before the deal, and then when you post it, it seems random. When you suddenly post something, under conditional offer, looking for investors, DM me, right? It feels rushed. It feels out of nowhere. It feels desperate. The truth is, if you're not already visible when the deal arrives, you're already too late. And that's when the order matters. Visibility creates space for trust. And trust creates confidence for people to say yes. Let that sink in. So I'm going to tell you a story. And because this isn't just theory. I learned this lesson when there was no deal at all on the table. And Cam knows my story here. So a few years ago in 2023, I lost everything in a fire. Right? We got out safely, so not to worry. Nobody was hurt, but we left with nothing, just the shirts on our backs. In fact, my older son had no shirt, no shoes. And although we had no property, no opportunity, and nothing to offer, something incredible happened. People from the real estate network started fundraising to help me rebuild my life. People I met in person, people I met virtually, people I knew through social media. Most of them were I met through social media, that knew me through social media, because I shared a lot of value. And within 2 weeks, we raised almost $20,000 in just 2 weeks. They weren't investing in property. They were investing in me. And that's when it became undeniable that trust always comes. It's built before the ask, always. All right. I had built up that equity in me through through everything that I had given before that. So here's another story, the opposite story. We shared this on Cam's podcast, Man Up, recently. But the next deal, it showed me that visibility, although I was visible and I had built trust there and people liked me, it showed me that visibility without an actual clear system and investor pipeline wasn't enough. Because just a few months later, I found myself in front of this massive land development opportunity. And I realized I had no one ready to fund it. I had found an incredible opportunity, a land development deal at an amazing price. But instead of feeling excited, I went straight into panic mode because even though I was visible, even though I had a strong reputation, I had no investors lined up. I didn't have a pipeline. I didn't have a curated list. I just had random contacts that I didn't know whether they were passive, whether they were active, how much money they had, whether they would be interested in this. Nothing. None of them were qualified or ready for a $6 million project. So I had already created this, what I've been telling you about visibility. I had that. I had an email list of 1,200 people. I had like 4,000 followers on Facebook. I had over 2,000 on LinkedIn. I had, I was in every Facebook group because when COVID hit, like there were Facebook groups everywhere. You guys know this. There's Facebook groups now everywhere. Every coach, everybody has a group. And I was on every one of them. I was networking all the time. I was showing up in all these groups at their virtual meetings, but none of it aligned. And that's when doubt hit me. I was like, well, who am I to raise this much? I can't raise this much. I'm not a salesperson. I can't do salesy stuff. That isn't me. I don't know where to start. What if I fail, right? So all that imposter syndrome stuff, all that self-doubt, they all came in. And I tried everything that the gurus teach. I posted the opportunity on Facebook in groups. I was pitching at every network event. I was feeling like a used car salesman and it was so slimy. And it was so awkward. I was collecting business cards. I was DMing people I hadn't talked to in years. And I was trying to like slide the deal into conversations. You guys know what that's like, right? And I reached out and I was trying to partner with people who I knew had investor lists and say, come and help me raise capital. I was talking numbers instead of building relationships. And the more I did that, the more further away I was feeling from being a real investor. And the further away I was feeling from being the true me. And I looked desperate and I felt desperate, and none of it aligned with who I was because I've always been about relationships and not selling. So in the end, the deal was gone, right? I lost the deal. Not because the deal wasn't good, not because my numbers weren't great, but because I didn't have a system to raise capital in time. That moment really changed everything for me because I realized something like plainly clear and painfully clear too. It didn't matter how good the opportunity was. Without people who were ready to fund it, the opportunity was worthless. And it's really weird because, I knew about putting systems in place from my corporate job. And somehow I have this barrier between my corporate job and my business. And I didn't translate that. But that's when it really hit home for me. And I knew that I had the skills and the tools to fix this. Then I had to step back and fix it. So That's when I finally stepped back. And because it wasn't that I wasn't visible, it wasn't that I wasn't working hard, and it definitely wasn't that I didn't know about real estate. But the real problem was that I was visible, but I was random. I was posting, but I had no clear path to relationships. And I was busy, but I wasn't building anything that was predictable. It was just like I was what I call I was Frankensteining it, right? A little here, a little there, a little there, but nothing together. And it didn't connect. The dots didn't connect. I didn't need any more information. I didn't need any more tactics. I needed a system. And I needed a system that could curate my network. I needed a system that we could take all the content and conversations and connections that I was creating and funnel them together into a list of investors intentionally. Investors that were qualified, that had the right values, that aligned with my strategy. Because here's the truth. I was doing all these things, showing up on Facebook, on LinkedIn. I was posting content. I was attending events. I was booking calls. I was making connections, but none of it was actually working together. Right? You guys understand what I mean by Frankenstein? You know, they put together like all these bits into him, and it did not. It came out really ugly. So I was spending time with everyone instead of focusing on the right ones. I was nurturing the people who I wasn't nurturing the people who was actually aligned, in alignment, and the interest and the capacity to say yes when it counted, when I needed that $6 million. And then I'd get a deal and I'd realize I had no one ready. And that's when it clicked. If I didn't need a visibility, I needed a process that turned visibility into connection, and connection into trust, and then trust into qualified, ready to go list of investors. And that's the shift that I made. So from chasing leads to and hoping for the best, which many of us do, to showing up with purpose, nurturing the right people, building the right relationships before the deal ever shows up. So this is an acronym I want you guys to remember. It's called TRUST. And it's intentional, obviously. So the T is for targeted strategy. Then we've got R for reputation, understanding via content, strategic networking, and then trust built over time. So I'll explain this. When you know the truth, deals fall apart not because they're bad. And visibility isn't just about showing up. It's about showing up with intentionally in the right places, in the right way. So that means being visible where real estate investors' relationships are built. So be on Facebook where real estate investors are, JV partners are, and other boots on the ground people, where they're hanging out. Get into those groups, right? Where they're hanging out every day. On LinkedIn, that's where the high income professionals with money but no time are. And they're quietly watching and they're reading and they're deciding who they're going to trust. That's where CEOs are. That's where money people are. These two platforms, they're not optional. You need to be on both of them. They are modern day meeting rooms for real estate capital. And if you're not consistently visible on both of those, you are invisible to people who matter the most. And don't tell me, well, I don't like social media, because I see you guys randomly scrolling, going on Instagram all the time and on Facebook, but you're just lurking. So it's not that you don't like social media. You just don't want to be, you're just too shy to be on there. And you say things like, oh, I don't know what to post. I don't have anything to post, right? So this is why I created this trust model, this trust formula. It's step by step that starts with visibility first and ends with that ready to fund investor partner before the opportunity even appears. So let's break it down. Let's talk about the T. So who are we talking to? So the T is for targeted investment, like I'd say investment strategy and your ideal partner. So you need to understand what your real your personal investing strategy is. And this doesn't mean, oh, I do buy and holds. No, it's kind of like Cam, what his market updates that he was just talking about. Each market is different. There's no one market. So understand in your strategy what market you're in. What type of properties do you do? How do you finance those properties? Those are all part of your strategy. What kind of rental strategies are you going to be doing? Are you doing long term? Are you doing short term? Are you doing midterm? Are you doing students? Are you doing seniors? Are you doing co-living? Like all of those, right? What type of properties? Is it condos? Is it single family homes? Is it multifamily? Is it townhouses? Is it commercial? All of this, get right down to that and understand that strategy. That's the first thing. You need to understand who you are. What is it that you're doing? Then we're going to nail one. That's what we just said. We nailed down that asset class, that market, that capital structure. Then we identify your ideal investor profile, and not just everyone with money. Before content, before networking, we need to get crystal clear on these things. Who is your investor partner? The right investor partner. So not everybody with money, and not every money is good money. So who aligns with your strategy? Who aligns with your values? Who has the similar goals? What are their goals? How long do they need the money? Can they commit that money for? Is really important. What's their risk tolerance? Who has the capacity to invest? You don't want to take their last dollar. So you need to understand that. So have that picture in your mind of who that ideal investor would look like. Maybe you even know somebody. So if you can, name that person, picture them, and understand. If you say, oh, that person is my ideal investor, then break it back down and say, well, why? Why are they? And understand what values. And that's probably the person as a wide, group that you are targeting. That's your ideal investor. So you need to understand that. This is the foundation of everything. And once you understand that, your message can then align with their motivations. Because when you know who you're speaking to, your message then finally lands. If you don't know, if you're trying to speak to everyone, you're speaking to no one. Any questions? Because I'm babbling away. Am I coming at this from the opportunity or the investor perspective? So these are things that Susan, these are things like who your ideal investor partner is, who are not the opportunity. You're the one with the opportunity, right? You're looking at who your investor partner is. The top part is the opportunity. Like this is what are you investing in? So you need to understand your strategy and define it clearly. And then you need to understand who your ideal investor who would like to invest in your strategy. So if your strategy is to have a joint venture partner, what would that joint venture partner look like? What's their income? Those kind of things. If you're in multifamily and it's a bunch of investors, maybe you're looking for accredited investors. But what maybe it's in a particular, maybe you're looking in a particular group like IT professionals, those kind of things. All these are what I mean by your ideal investor profile. Like what do they look like? Because you'll understand when you start doing your content, you need your content to resonate with them. So you can start talking about that person's dreams. that person's fears. What does that person's day look like? Right? The same thing with your strategy. You can be able to explain your strategy to people. You need to be able to do that on social media through your content. Does that make sense, Susan? I'm waiting. Okay, I'll keep going. I see a message. Wait, I've lost my, hold on, guys. I've lost my screen now. Okay, I'm back. Cam, my slides are still on the right place? You can see the slides? The presentation?
Yeah, you're good.
Good. So the R is for reputation, brand, and credibility. So next, once we understand who we are, like what's our strategy, so we can explain very detailed what our strategy is, and who our investor, what does our investor look like. Our next thing is we need to get visible on Facebook and LinkedIn, where the people you need to invest with hang out. So this is where you're going to create your investor facing brand. And this is where that information that we just talked about, getting deep on to understand your strategy, etc. You need to be able to explain it here for people to understand. So you're going to optimize your Facebook and your LinkedIn profile with who do you help and with what? What's your strategy? And make it succinct. You're going to rewrite your headlines, your bios, your positioning. You're going to rewrite all of those in LinkedIn and on Facebook. You're going to make it very clear who you are, what you do, and who you're doing it for, and what would their ideal life, what will be the outcome once you've helped him look like. Okay. So when someone looks you up, they don't feel confused. I get friended all the time, and I don't understand why these people are friending me. I scroll, I have to look to see, have they posted anything about real estate? What are they doing in real estate? Who are their friends? I have to like really go deep to understand whether I want to accept them or not. And I shouldn't have to, because that should show up right at the beginning. I shouldn't have to scroll. I'm just more patient because I just, okay, let's give this person a chance. But it shouldn't have to. You should be able to, okay, this is a real estate person. That's why they're reaching out to me. I'll accept them. So when someone looks you up, they don't feel confused. They feel oriented. They understand your strategy before they even talk to you or ever talk to you. They're understanding that, right? So for instance, if you look at my Facebook page and my LinkedIn, this is my LinkedIn here. So you can see what I do. You can see how to contact me, my contact information. You can see my headlines here: helping real estate investors close fully funded opportunities by connecting with qualified investors. So you know what I'm doing. My title, REI Success Coach. I'm a podcast host, etc. And I put a little bit of humanity in there. I'm a proud mom, because anybody that knows me know how proud I am about my sons. Very proud mom. I'm more proud of them than I am of myself. They are my greatest achievement in life. So next we go to the U in trust, which is understand through strategic content. This is what I'm building it here, and I hope you can see those steps that I'm building, because all these things we talked about again at the beginning, understanding their dreams, their fears, your ideal client, how old they are, all of those come together to build content that targets exactly them. You're speaking their language. They go, oh, that's me. Yeah, I feel like I feel like she's or he's talking to me. We can now focus content, create focused content, not random content, because you might be just posting. Maybe you try posting, but you're posting it on all sorts of different strategies, all the strategies out there. but you should be posting on your strategy, what it is you're doing. Teach people what you're doing, why your strategy is the best strategy, right? You want to convince them that your strategy is the best. So you want to give them as much information as possible. So content should be familiar. We build written and video content, content pillars that are tied directly to your strategy, and create a simple content calendar that you can actually maintain. Make sure that it's something that you can do it, and you can commit to it. You don't have to post every single day like Cam and I would be doing. We're not asking you to do that, but pick 2 days and do it consistently. And then over time, as you develop that skill, you're going to be able to do it faster and more. But just pick it, create a content calendar, and say, these are the days I'm going to do it. And I'm always going to show up with a post on that day. And your content should be designed speaking directly to the needs and the questions that your ideal investors would have. If you're having a JV partnership, for instance, people want to know why do you get 50% when I'm putting in all this money? Create those kind of posts, educational posts that teaches people, so that when you actually come to tell them about the opportunity, you don't have to go through that. You don't have to explain what a JV partnership has, why it is the way it is, why it's broken down that way. They have found out all about it through your content. Demonstrate how you think and how you operate. Build familiarity and trust over time. This isn't about going viral. You don't want viral videos. It's about making sure that the right people recognize themselves in your content, in what you're sharing. Well, tell personal stories, do deal analysis, do behind the scenes, show them behind the scenes. Like, I'm walking through this house and, I'm thinking about like what I can do with this. There's a closet here. I can actually, it's pretty big. I can turn it into a bathroom. This is going to add value. Or this isn't good about this house. This is restricting. This is why I wouldn't even look at this opportunity to move it forward. Like, show them behind the scenes of what's happening. Show them how you're analyzing that deal. How do you do these things? So right here, I've said, use tools like ChatGPT, Gemini, and Claude to help you create content faster and more consistently. It will give you a whole bunch of ideas. You can put together your thoughts really quickly into ChatGPT in point form, and then it can make it sound better, right? Use those tools. And over time, you're going to get better at it, but use it. At least start doing something. And don't be afraid of it. Add Canva to keep your brand looking clean, professional, and recognizable. You don't need to pay the paid version of ChatGPT. You don't need the paid version of Canva. There's enough in the free versions for you to do it. So, and you don't need to have a whole bunch of experience to create this in Canva either. Canva has templates you can reuse. All right. So your content builds credibility. I want you to remember that long before you even make an ask. So when they come to your Facebook page right away, they're able to see, oh, this is a professional person. If you like in a bikini or with sunglasses, if your banner is of something really of your cats, that doesn't tell that you're a professional real estate investor. And that's what they first see. That's their first impression when they go into your social media. So remember that. You want to create a professional image there. So the S, which is strategic networking and putting in systems in place and follow up. Don't go to a networking event and don't follow up after, right? Stop chasing, start nurturing. You're not following up to sell. You're following up to build relationships. So this is where a lot of investors lose time. and where things start to shift when it's done with intention. Instead of networking feeling random and transactional, it starts to look more like being remembered after a conversation and not forgotten by doing those following ups, like starting conversations that feel natural and not forced. You're not going out there to sell something. You're not trying to slip in numbers and deals and like I was when I had that $6 million project, right? You're not reaching out in a way that you need to reach out in a way that feels genuine, not scripted. And you're following up in a way that feels aligned, but you're not pushy. You've got a system and you're following up, and people don't feel forgotten, but you're not pushing yet because they're still what we call, cold leads. You're going to nurture them. You just met them in a networking event. So then you're going to follow up. You're not trying to sell them as yet. You've just met that person. You need to date them before you ask for marriage. So you're going to go through that, like that first date, that second date, you're going to go through that dating. Right? So remember, think of it as dating, this whole relationship. And behind the scenes, there's lots more that we want to put in place, structure to support it, like keeping track of the relationship. So once you meet someone, put them into an Excel spreadsheet if you don't have anything else, or a Google sheet. If you have a CRM, or there are free CRMs you can get out there, like HubSpot. So go out, put them into an Excel spreadsheet. At least that's how I started, and with columns of but with notes a little bit about what you learned about them, their contact information. When did you first meet them? When are you going to follow up next? What did they ask for? What was the conversation about that? If you were to find something if you can find something related to the conversation, say, hey, I just saw this real good, great blog post exactly on this, or this article, right? You want to be like tracking those things and keeping those things in mind. Knowing who's aligned and who's not. If this person is an active investor, right, you want to know, you're going to spend less time with them than a passive one, because okay, they're a passive investor. They're already coming okay, what's next? We need to now nurture that person and see if they align on values, etc. But the active investor, they're not your ideal client. They're good for friends. They're good for mentoring, maybe. They're good for being an accountability partner, but they're not your ideal investor. So you're building a list of people who actually fit, not just a list of contacts, and stay top of mind through simple, consistent touch points with them, continuing the relationship even when there's no deal, and especially when there's no deal on the table. Right? So random networking creates noise, but strategic systems will build relationships. And with a few simple systems in place, even things like scheduling and conversations become more intentional. Your time is spent with the right people, and not just people, and not just more people. Your time is precious. You need to be protecting it. So that might sound cold, but if they're an active partner, you don't want to be spending as much time with them. You only have so much time. You need to be nurturing the ones that are passive, or align with you. So by the time the opportunity appears, you're not having to introduce yourself. You're not having to explain from scratch. You're not pitching to strangers. You're continuing conversations with people who already know you, understand your strategy, and trust how you operate. This is where it all clicks. This is the whole point. We're doing it in a systematic manner that you don't have to go now and do this presentation to them to explain, this is who I am. This is the team I work with. This is like all crammed into an hour webinar trying to convince people this is why this market is so good. This is what we're doing. This is like, you don't have to have those conversations because it's just natural. They have been following you along the way. You've nurtured it. They know exactly what you're doing. You're just continuing conversations with people you already know that understand your strategy and they trust how you operate. We even look at like credibility multipliers. So get on podcasts. Like I'm on here with Cam. Like I'm giving value. Get on and Cam's been on my podcast. I was on my. Get out there on podcasts and lives and interviews. Show your authority. So your authority extends beyond your network. Use other people's networks, which is like we talked about this. Cam and I talked about this. Use OPC, other people's credibility, instead of OPM. So you're going to leverage other people's credibility. So leverage their going on podcasts. If they've got blogs that you can write on, we're going to get you. You got to get out there so that your authority extends beyond your network. That's how funding becomes calm, confident, and predictable. Not because you chased harder, but because you came better prepared. Excuse me. So why this works is because nothing is random. Every post, every conversation, every follow-up, every system, it all ties back to the one thing: never missing another deal because the right investor wasn't in place. That's what we want to make sure happens for you. So now that I've gone through this trust system, you might be saying, these are some of the things that people say. At this point, you might be thinking, well, I don't need to do all of this. This sounds like a lot of work. And if I have a good enough deal, investors will come. That idea assumes that investors discover deals first and then people second. But in reality, it's the other way around, right? The people want to understand who they're working with first before they focus on what they're investing in, before they focus on the numbers. They want to know who is the person that they're investing with, which means trust is already forming before you even introduce that deal, through things like how you show up, how you share, how you communicate, right? And consistency over time. If you're dedicated, if you're consistent with showing up, it shows how are you going to show up in your investment. So by the time the opportunity does come up, it's not the first time they're hearing about you. They've already have this sense of how you invest, what you focus on, and how you operate and what your values are. And instead of feeling like a pitch, it feels natural. It's a natural next step in the relationship that already exists to start talking numbers. So I'm hearing you say, but Debbie, I need an opportunity first before I build a network or show up online. I'll show up after I get something worth showing up for. This is where most investors unknowingly reverse the order. It feels logical, but it's actually works against you. It's backwards, because opportunities shouldn't be introduced to cold networks. You can't sell something to someone that don't know anything about you. Imagine if you didn't know anything about iPhone and somebody came to you and went, this is the best thing since sliced bread. You have to have one of these, right? You wouldn't buy it, but we know, but Apple has spent so much time on their personal branding. We now are so excited. We can't wait for the next Apple product to come up because they've built that with us. You need to build that same enthusiasm with your investors. They land much better in networks that are warm. So instead, Instead of waiting for the opportunity, the focus shifts to building familiarity and connection ahead of time. And in real life, it often looks like you meet somebody at a networking event. So imagine that you meet them at a networking event, and what are they going to do after? They usually ask you, "Oh, are you on LinkedIn? Are you on Facebook?" What's the reason for them asking that? Because they want to find out more about you. So they're going to go home and they're going to look you up after. Your profile will then give them immediate clarity as to who you are and what you focus on. If you do this right. If you don't, you go home and it's not professional and they don't see anything about what you do and you're not posting and they don't know anything about you. You know what they're going to do? They're going to ghost you. Right? So your content needs to reinforce how you think, how you operate, and the follow-up conversation then feels natural and not forced. Instead of, starting from zero every time, every interaction builds on each other. So now they've gone home, they've looked you up on social media, they know more about you now. So then the next time you contact them, so then you're going to follow up with them. You're going to DM, you're going to text them, and you're going to speak a bit more about the conversation you had or, what they were into. So we're going to follow up on that, and it's all natural. And that's really the role of visibility. It doesn't replace the relationships, but it reinforces it. So social media needs to be there. I'll give you an example. There is this guy I keep wanting to introduce to my son, but my son refuses to see him because he gives tax advice. He gives people, he shows how to set up, structure your company. That's legal, but it's a loophole. And he doesn't want the tax people knowing about him. So he doesn't go on social media. But because he's not on social media, when my son looks him up, can't find him, he's like, I don't know anything about this guy. I don't think he's got, he's professional. He doesn't have any credibility with me. I'm not going to waste my time meeting with him. That's how people think, right? If they can't find you on social media, if you're invisible. Here's the other but. But my results should speak for themselves, Debbie. I've done deals. I've done all these deals before. People will naturally want in because I have all this experience. They will, but only if they actually can see what it is you've done and understand it. Because most people aren't in the room with you. They're not hearing your conversations. They're not seeing what you've done behind the scenes. So what they experience is whatever is visible to them, whatever you show them, which is why it helps to make your experience and your strategy and your perception, your perspective, easy to recognize and understand by sharing it on social media. So they can be there. They can feel like they're there walking beside you. Right? So when someone hears your name, they're not left wondering, what do they actually do? What's their experience? What do they, what have they done before? What would it be like to work with them? Those questions you've already answered because you're answering it on social media. You're creating newsletters and you're telling stories in emails and sending it to them. So all that stuff, it's already there. Those questions are answered before conversations even start, right? And that's what makes everything else easier because it's supported. There's that alignment there. Conversations start feeling more natural. You have less explaining to do. You have less hesitation. You have more alignment because instead of starting with zero, you're picking up where from their understanding that they already have. Okay. At this point, you might be thinking too, well, I don't have time for all that online stuff. Debbie, this stuff sounds like a lot of work. I've got a day job. I've got to find deals. Deals are more important. I just need to find deals. And it can feel a lot. Content can, people think that content takes too much time. But usually it's only true when everything is manual, scattered, and disconnected. And I think Cam would agree with me. Right? When you first started, it's like I'm doing a little of this, I'm doing a little of that, and it's all, and you're trying to like appeal to everybody. But instead of draining your time, it actually can save your time because you're building things that compound over time. Right? So you're not having to restart every time you speak to someone. And if you put the right systems in place and you set up your calendar in a way that, okay, today I'm going to prepare all my content for a month. And you can do that, right? And there are ways of scheduling things so that you don't have to go on and post every day. You spend a few hours just like, this is what I'm going to do. And I'm going to do it for the whole month. I'm going to schedule it and have it come out. It's less about doing, it's less about doing more and more about connecting what you're already doing. So the work you're doing to find deals can naturally become what you share. You've got stories right there as you're finding those deals. What did you do today? Like what didn't fit into, what you looked at that didn't fit into your expectations, your strategy, right? What are all the things you're doing? Who are you talking to? What came out of those conversations? Your conversations turn into insights. Your analysis becomes education for people. Show them how you're analyzing deals. Your process becomes proof. With a few simple systems, light automation, and tools like ChatGPT, you can turn everyday activities into content you can just reuse and reuse. And without starting from scratch every single time. Right? You can bring back stories 3 months later. People forget. There's so much out there. So your content supports your profiles. Your profiles are supporting your network. Your networking is supporting your relationships. Your relationships support your follow-up. And nothing is duplicated. Nothing is random. And that's how you stay visible and consistent without it taking over your life. And when that's in place, funding stops being that scramble. And when the next opportunity shows up, then it's smooth, it's calm, it's not panic. Right? So here's another objection I get. Debbie, I don't have any real estate experience. Why would anyone invest with me? This is the biggest fear of new investors. That's what new investors carry. How do I get people to invest with me? Because I'm new. I don't know anything. But here's what most people don't realize. Investors are pitched every single day. I told you my story. I get pitched all the time by experienced people with polished decks and impressive numbers. They want to get on a call with me to show me their beautiful slides and their cool ROI numbers. And most of the time, they say no. I say no. I delete. I'm like, oh, I don't want to talk to this person. They're pushy. They don't even know I'm an active investor. I'm not investing, and they didn't even try to find out that. Because deals are everywhere, but trust isn't. Trust is rare. It's not really about having more deals. It's about becoming someone people feel confident to say yes to. Someone that they can trust, someone that they understand, someone that they believe in. If you're brand new, you're actually in a powerful position because you get to build the foundation intentionally right from the beginning. You get to introduce yourself. You get to show them exactly what you're doing, what you're learning. You get to do it properly, right? That can look like showing up with clarity, consistent, so people recognize you, drawing on your real world experience. We have so much experience in our day jobs, in our, in our past, that we can start sharing, that helps build our credibility. Because just because you're new at real estate investing doesn't mean you don't have project management skills, that you don't have analysis skills, that you're not a carpenter, you don't have skills to build, like you're a carpenter, or you've done construction, all these things. You probably have skills. You start showing those at the beginning. That helps build credibility. They want to see how you think. You can share stories that happen in something else, of how you overcame a problem. That shows people that you're resilient, that this person, if I invest with them and I hit a problem, that the investment hits a problem, they're not going to just give up. They're going to solve it, because that's the type of person they are. Letting people see how you think, how you operate, and what you stand for. So that over time, you're not trying to convince anyone. You're simply continuing conversations with people who already trust you. Because when the right opportunity comes along, you don't want people to say, who's this person? And why should I trust them? You want them to say, I already know them. I believe in them. Let's go. How do we make this possible? So the real shift breaks down when online visibility and offline relationships work together. All right? We're no longer meeting people once and being forgotten. We're no longer pitching to strangers. You're no longer going to go in a networking event and be ghosted after, although you thought you had an amazing conversation with them. You're not explaining yourself from scratch. You're building recognition, familiarity, and trust before the opportunity exists. And that's why this works, because funding doesn't come from deals. I always say that 80% of real estate investing is about relationships, and 20% is about the actual deals. So it comes from relationships supported by credibility built over time. All right. So here's some things that, so this one. So here's an example. This is Sherry. She's a real estate investor, and she was on one of my courses, and there was a course for I think it was a Facebook course, and we worked on the first thing I always do is teach how to drill down on what I said, understanding who you are as an investor, what your strategy is, and who your ideal client is. So within like the first few weeks after her course with me, or even like during the course of it was a 5-week course, Sherry, in the past, she'd been quietly working, doing great work, but nobody saw her. And she was also confused about how does she express what she does. So when she had clarity about that, and she started appearing consistently on Facebook, then everything changed, right? Investors started to recognize her profile. We optimized her profile. We gave her a clear message. We created simple and consistent content that resonated, and the results came really fast. She had 550 views on one reel. Right? She was struggling at first. She had a full-time job. She was struggling to stay consistent, but then she had no idea what she was going to post. She was feeling like mentally drained. What do I post about? And she was constantly questioning if anything she shared even mattered. But within those first few weeks of implementing that visibility section of the program, Sherry came back and she shared with me that she had a reel that passed 550,000 views and brought in 270 followers. That's when you know that you're talking to the right people, because the right people started to see it, and the right people wanted to find out more. So they started following her. Right? Her LinkedIn and her Facebook profiles were clear. Her message aligned on her brand. And now the right people were watching her and reaching out. even before she finished the program. And then here is Terry and Francis. And with them, they were, they were talking to everyone and connecting with no one. They knew they needed visibility, but they had no idea where to start. And then once we optimized their Facebook profile, their presence, and we started dialing on that message, they said that, it's transformed their approach to their online, and they started unlocking opportunities and connections. I also taught Frances how to use ChatGPT, and now she's a monster on ChatGPT. She uses ChatGPT for everything. She just every time I see her, she said, "Deb, learning ChatGPT was the best thing in my life. You don't know how much it's changed my life in my day job and in real estate investing." So they learned how to write posts with purpose. They started to design a profile that reflected their strategy, and they created content that spoke directly to their ideal investor partners. And now they're attracting aligned relationships, and they're not chasing strangers. So this is Belky, same thing with her. So she came in overwhelmed, scattered, and unfocused. And then she had big goals, but she didn't know how to structure them. So we worked with her on, same thing, optimizing her Facebook and LinkedIn, creating value-driven content using AI tools. And she loved that. Setting up an automated calendar made a difference to her. Streamlining how people contacted her, the contact management and the contact management and her calendar. So, and then she said that it saved so much of her time after putting those things in place, that it wasn't overwhelming. Okay. So you're probably wondering, though, these things like, okay, well, how do I define my ideal investor? You gave me high level, but how do I do that? How do I articulate my strategy clearly? How do I optimize my Facebook? How do I create content that attracts the right investors? How do I know who to network with? And how do I network without sounding salesy? There's all these questions. How do I follow up effectively? How do I pre-qualify? How do I build investor, my website so investors trust me? And how do I do it without it taking over my life? There's so much to answer. I know that this presentation can't cover, but I try to cover, at least giving you guys an idea of what that would look like, how you should be doing things. And there's things that you can, start implementing, changing the way you're talking to people, realizing that your social media does support you. So all these questions, though, are things that in my program as a coach, I work with my real estate investors on. Okay. So if you are at a point where, so if you're sitting there and you're thinking, this makes sense, I don't want to lose another deal that I wasn't prepared for, I want a qualified investor pipeline that Debbie's talking to me about, then the simple step is just book a complimentary consulting call with me. This is all of my ways that you can contact me and you can find me. And you can also follow all my free content that I have, or you can, this QR code, you can scan that and you can book a strategy call with me. And then we can just sit down and kind of map out a roadmap for you. And if it makes sense that you want to work with me, then we can do that. And if not, you still have some clarity of what you need to do so that you can go off and try to do it yourself. And with that, I will say, any questions?
All right, doesn't seem to be any questions right now. However, I just want to say thank you so much, Debbie, for coming in and delivering a great presentation. And I'm sure everyone in the chat, you were thinking, I'm here to learn how I can raise capital. Now suddenly I'm being told I got to go on social media. What the heck? And it's so true, though. I mean, at the end of the day, Debbie and I were talking about it on my podcast not too long ago. And the rules have changed, right? Before you used to do the same system, really, if you really wanted to do it right, but you had to get into rooms, you'd go to different networking events. This has opened up a much broader opportunity for investors because social media allows you to reach the world now. And Debbie, I really like what you put together, especially with breaking down the trust model. So, first of all, appreciate you for that. If you guys are still watching this, I'd also like to just give a shout out to Debbie. She just delivered all of this presentation for you guys to be able to learn on her birthday. That's right. It's Debbie's birthday. So if you guys are in the chat, make sure you guys drop a happy birthday to Debbie. If you're watching the replay, drop a comment. Happy birthday to Debbie, because we really appreciate you coming out, taking the time to pour into all these investors and do exactly what you're teaching. Showing people how to show up and give value is exactly what you did. So
Yeah, I really want to change people's lives. I see so many times people working so hard to find deals only to lose them. And
yeah.
time is money, and if people could just like take something away from today and start implementing, that would mean a lot to me. That would
Yeah,
be my
for
birthday
sure.
present.
There you go. I love it. I love it. You know what? Thank you again, Debbie, so much. We do really appreciate you. Again, thank you for being on the podcast. Thank you for joining us on IPG. Guys, if you haven't already, I'm going to pop her slide up here one more time. Scan the QR code right now. Make sure you guys connect with her. At the very minimum, give her a follow on whatever platform that you want to follow. We got some birthdays coming in here. We got Ruben saying, "Happy
Oh,
birthday,
thank you,
Debbie."
everyone.
Popcorn yellow striped smile. I think he was trying to do an emoji. We've got Mary J, Mar JJY. Happy birthday, Debbie. So there we go. Again, go and connect with Debbie. Debbie, thank you so much again for joining us today, and happy birthday again.
My pleasure. Thank you.
All right, we're going to kick things off and get into our hot deals now so we can get you guys out in a timely manner. Again, before we do that, though, also check out, I dropped the link earlier and it'll be coming up again, the complete investors content creator pack. This is everything that you guys also need to get started. So go check out Debbie. And if you're not ready for training yet, you're kind of nervous and you just want to start experimenting, this breaks down everything that you need to know to get started. Everything from some gear that you should buy that's super simple. We're not doing a full studio setup like we've got here. We're talking how you can use different editing tools like CapCut and Descript, how you can start creating content schedules. There's even AI guides in here. So if you haven't already, download this. It's free. And as well, on the back, you can also scan the QR code and book a 15-minute audit. We can audit one of your social media platforms. So again, Debbie goes into a lot more detail. This just gets you started and then gets you some comfort, and you can jump on Debbie's stuff right away. But if you're ready to start launching with Debbie, you can already see the results that Debbie has had. All right, let's talk about some hot deals. So we've got 3 hot deals for you today. Then we're going to get you out of here. So as of right now, there is definitely some opportunities for investors out there to take advantage of the fact that in sellers and in some cases other investors maybe are not in a position where they are able to close. And in this case, we have one of those deals. We have a distressed seller in Maple Ridge that absolutely needs out. Now, this is a pre-construction unit that is set to close somewhere between the end of April to maybe beginning of June. The contract price was $604,000 for a 2-bed, 2-bath, 754 square feet. And basically, they are ready to walk from the deposit. So you can pick this thing up in the low 500s at this point. A unit just sold, just for reference, for $535,000 in this same complex. So you are getting equity on the buy in this scenario. They are ready to walk and they are ready to take that loss if someone is ready to jump on that. Obviously, you increase your opportunity for cash flow at this price because paying 600 it might not. Low 500s, this property has a much better chance of cash flowing, especially with the right down payment and interest rate structure. So this is the complex. It's the Inspire. This is the floor plan. Pretty decent floor plan. Beautiful finishings. Great area of Maple Ridge, close to downtown, close to the bus loop, everything like that. North side and Dooney Truck for anyone who's familiar with Maple Ridge. So this is our first opportunity. If you guys are interested in getting more details, please send me an email to Cameron@KellyFryTeam, and I can send you all the details. We can have a discussion. I just got off the phone with him today, and he is in a position where he needs to get out of this thing ASAP. So let's have that conversation if this is something that you guys are interested in. The next property is, again, looking for cash flow in the market. There are the cash flow is coming back. We used to analyze these properties, and a year and a half ago, it would be negative $400 or $500. Now suddenly we are starting to see positive cash flow coming up, and we're running these numbers in probably the most conservative way possible. And if you do anything better interest rate, better negotiating, anything, it'll only increase. So this one here is a beautiful house in Mission, right in the middle of Mission. $900,000 currently. It's a 5-bedroom, 3-bath house, 2 suites. It's 3 up, 2 down. Currently, market rent is in and around the $2,600 for the upper unit based on the current renovation it has, and $1,600 down. Good size house, good size lot, built in 1975. You can see on the bottom a bit, it's got updated kitchen, it's got beautiful flooring. They've done a lot of work. I would say some of the bedrooms maybe need a bit of a paint job just to neutralize it a little bit. If you go through the photos, it's some unique painting in the bedrooms, but that's not a big fix. I figured we can probably get this on the high end for around 875, just based on what's happening in the market. If we negotiate hard, we can probably do better. I have seen those happen. We don't know what the motivation is of the seller at this point. Based on property tax, insurance, vacancy, mortgage, and repairs, we're factoring in still vacancy and repairs at 1%. It makes $161 a month. Again, not too shabby considering even a year ago, you could not make anything cash flow. If you were to increase your down payment, get that better price, better interest rate, we put it at 4.25%. I know people who are getting closer to that 4%. All of that will increase your cash flow. So keep that in mind. Total investment into a property like this is around $194,000 to get started. And your overall return on investment is sitting at around 21% when you factor in cash on cash, return on your equity over 12 months, and some slight appreciation of 3%. We're still factoring that in there. Again, it will come back. Historically, Greater Vancouver, Fraser Valley goes up on average 5 to 7% per annum. We are in a down cycle, and that's the opportunity for you to pick this up and hold on to it for the next 5 or so years. And you'll definitely see some of those returns start to come back. At least I feel like it. This market won't be down forever. We're already seeing signs of inventory starting to get tighter with developers, and there's talks about immigration increasing. So take that for what you will from that perspective. For those who don't maybe have that kind of capital, we like to show a more entry-level opportunity as well. This is a court-ordered sale in Chilliwack. This is a townhouse, 3 bedrooms, 2 bath. We estimate the rent to be around $25.50 based on what the market rate is in the area for this size of a property, built in 1975. And we ran the numbers again very conservatively, maybe shave off about $25,000 on this. Again, court-ordered sales. This is an opportunity where I think investors could take advantage. 3 to 4 years ago, court-ordered sales were not a good deal. You were actually, in my opinion, paying more at court because everyone thought it was a good deal, that the bidding was even crazier than just the regular market. However, now the amount of times we have heard court deals going to court uncontested on the first offer, and your first offer is typically the lowest, that is blowing my mind. So you can get in there, write a deal, put your subjects in there, negotiate the lowest price possible, get to court and not have to upbid your offer. Guys, there's opportunities out there right now. So check this one out. So this one right now at $375, if you negotiate only $25K off, it'll cash flow around $240 a month for a townhouse, factoring in your property tax insurance. I did have, I think, vacancy and repairs in there before, but I think they got missed on this. So again, you're looking at a total investment about $83,000. So this is a good entry level investment for those who maybe don't have as much capital. Overall return on your investment in this one is up to 23, almost 24%, factoring in your cash on cash, return on equity, and some slight appreciation. So those are hot deals for the month. We've got a distressed condo that needs to sell. You've got a townhouse that's a great little cash flowing court ordered sale, and you've got a great suited house out in Mission. Guys, I've said it a couple of months ago. I'm going to say it again. Cash flow is back in the Lower Mainland. You just have to be ready to jump on it and take advantage of it. This is an investor's market. They call it a buyer's market for a reason. Investors are traditionally buyers first, sellers later. All right. We've got a few QR codes for you guys as well. So flip your phones out. You can scan this one to join all of the Kelly Fry team socials. We are everywhere, and our marketing team is constantly making me do goofy videos. So if you guys want to check those out, go and check those out. I was just recently doing some air guitar right now on the last one. So fun videos there, but we also post a lot of educational content, updating on deals, everything like that as well. So check those out there. I'll give you a quick second, scan that, and 5, 4, 3, 2, 1. Next QR code. Of course, if you haven't already, just instead of scanning the QR, you can literally go right below. If you see the subscribe button is red, hit that subscribe button right now. We have been on a massive growth with this channel, and I hope to continue to create a lot of great content for you guys to learn how to invest and buy real estate strategically so you can build up your portfolios and your wealth out there. So all I ask is you just hit that subscribe button and help me get this channel to more people out there. The higher subscribers, the more the algorithms throw it out to people, and it helps us with all that. Don't forget to like this as well while we're talking about. Let's do all the things that the social media world likes, like, comment, subscribe, everything like that. And of course, check out the Manning Up on Real Estate podcast. This is to the YouTube channel. You can watch the podcast that Debbie and I went through. She goes into some deep stories. Like, she hinted at some of her stories before, but like when she talked about losing that deal, like she talks about the financial loss on that and how much it was, how big that deal was. Like I said, she didn't go deep into that today because honestly, you got to go check out that podcast. So scan this to go check it out on YouTube. This is the podcast here. We talk about how she lost 67,000, how, she learned from it. She's built from there, and that's how she built her systems. And honestly, it is a fantastic listen. I've already listened to it like a half a dozen times because I keep pulling nuggets away from what Debbie was talking about. And of course, if you want to listen to the podcast, you're maybe not ready to sit down and watch a YouTube video, but you're driving. It's literally everywhere. You've got Spotify, you've got Apple Podcast, Amazon Prime Music, everywhere that you listen to a podcast, the podcast is there for you. So you can scan that. Again, 5, 4, 3, 2, 1. Lots of QR codes, I know. And of course, we do have our own Facebook community group as well. I definitely recommend checking out Debbie's. Debbie goes live every Thursday on hers, so she offers a lot of free value there. But of course, join the Investors Performance Group as well on Facebook, and let's contribute in that. If you have deals that you are looking for funding, I know this goes against kind of what Debbie said, but you can still post them. And even though you might not get an investor from it, you can start creating some visibility. If you have capital that you're looking to invest, you can do it there. Or if you just have questions or anything in general that you need help on, use the community. That is what it's there for. Also, it keeps you up to date on these future IPG events as well. So we post the events in there. We post updates ourselves, everything like that. And then again, we talked about it before. Quick shout out, the complete investor content starter pack. You know how this came about? Just so aside, this came about because of Debbie. Just so you guys know, there's over $250 worth of value in here because Debbie, I'm going to bring her back up on stage. One second. Where's my cursor here? There we go. You guys get access to this because Debbie had put together her, what is it called? The massive lifestyle investor giveaway, right?
Mm-hmm. Yeah, real estate. Yeah, real estate investor lifestyle giveaway or something like that. Call it.
That's right. So every year she's putting this together where she's pulling in different influencers and real estate and everything, and basically getting us to give you guys stuff for free that help you get better at investing. So this came about because Debbie asked me to be on it, and I poured a ton of time and effort in to make sure you guys have everything you need to start creating content. So check that one out. And of course, in there's a few other discounts you can get for different products and all that. And you can also book for your 15-minute audit. So again, everyone thank Debbie for all that work that we put into that.
And I want to share that, for your group, that's exactly where people want to be in. Go into these groups because those people are already curated. They're not going out. You're not casting a wide net. That these people are investors. So that's a good place to share. Like if you're going to see a property, share what it is you saw with that property. There's so that when they do post that that opportunity is up, they're looking for opportunities. People have already seen them doing the due diligence.
Absolutely. Absolutely. I agree with that. I mean, at the end of the day too, you're going to see other people comment on it who and if they're commenting that they know that person, that's also that built-in trust that you talked about as well, like with the podcast and everything. So again, guys, scan that QR code or check the link in the comments. Go download that. That's all for you for free. $250 value just for you guys there. So, and then finally, we will wrap it up here with the announcement for next month's meeting. It's going to be on April 23rd here on the Cameraman YouTube channel. So make sure you guys, if you haven't already subscribed, do all the things that the YouTube algorithm wants you to do, and mark it on your calendars. Go join the Facebook community group, and we'll see you guys on April 23rd. So thank you so much, everyone.
Bye, everyone.